Wrongful trading is back, so watch out. Firms signed up to the prompt payment code now have to pay small business invoices faster. Wrongful trading is back, so watch out. Firms signed up to the prompt payment code now have to pay small business invoices faster, and the importance of cash flow planning. All of this in the latest Business Finance Bulletin. Previous bulletin, I mentioned that the government had extended the moratorium, hampering the ability of businesses owed money to issue statutory demands and winding up petitions. This was issued right at the beginning of the pandemic in 2020 in order to protect firms being hounded for money. Now, when those moratoriums were granted, the government also threw in the suspension of a definition of wrongful trading. And I'll come on to in a sec what that exactly means. Now, these moratoriums have been extended a number of times. And as I said, the statutory demand and winding up petitions have been now extended to the 30th of September. However, the wrongful trading one has not been extended. So this is now back on the table. So how does this affect you as a company director? Well, wrongful trading can kick in where you as a director knowingly make decisions to put your business at risk. So for example, you enter into a loan arrangement, your company's already insolvent, and you know the chances of you actually paying that money back are next to zero. It also covers the fact where you've taken money from a business as a director, again, putting creditors' money at risk. So this wrongful trading is now back on the tables and something you need to watch out for. Now, don't get me wrong, directors will make decisions with the best intentions. So honest directors, the chances of you getting caught under this are quite slim. But you've really got to be mindful of this and ask the question, is the decision I'm making for my business today, bearing in mind we're insolvent, the right decision? Or is it better to call it a day now? In order to protect yourself, if you're in this position of trading an insolvent business, it's best that you take the appropriate professional advice from a licensed insolvency practitioner. Search out one in your local area and make sure you protect your position by taking the right advice. As we know, late payment really is the bugbear of many small businesses, especially if you are trading, for example, with a very large business. You feel you have no leverage, no power, and you're always far down the line when it comes to priority of payment. Well, there are over 3,000 firms in the UK that are signed up to the prompt payment code. Prompt payment code is a voluntary code where businesses have signed the code to say that they will pay businesses on time. Now, with effect from the 1st of July, the number of days in which the bigger firms have to pay smaller businesses has now reduced. So with effect from this 1st of July, if a larger firm who signed up to the code has an invoice from a small business, which is defined as a business employing 50 people or less, they now have to pay that business within 30 days. Previously, it was 60 days. So now we've got the number of days outstanding cut in half. By signing up to the prompt payment code, these larger firms commit that 95% of their invoices to smaller businesses will be paid within that 30-day period. So this is good news for small businesses. Now, if you want to know more about the prompt payment code and whether your suppliers or customers are signed up to this, all you have to do is go along to the prompt payment code website, which is promptpaymentcode.org.uk, and there you will find a list of all the businesses that have signed up to this voluntary code. A great news for smaller businesses, and hopefully it will benefit everybody's cash flow. Well, survey after survey is showing that the economy is starting to pick up again. Sales are up, firms are intending and starting to rehire staff, all good stuff. However, there is a bit of a black cloud looming on the horizon. In September, I think that's going to be starting to be a bit of a crunch point for many businesses when sales really come back into play and government support schemes come to an end. Now, I had a really good conversation with a client this week. They'd called me in because they'd done some cash flow forecasting right up until the end of the autumn period, and they realized that they are likely to face a bit of a cash crunch. Sales are growing again, so they need additional working capital in order to fund a growing debtor book and more stock, take on more staff, and they're looking at moving some premises as well. All of this is a perfect storm. They also took a look at their debtor book and could already see probably some pressure coming from some debtors where it was questionable whether they'll get paid on time. all of this worked out to a cash flow gap that needs to be funded. And this is the right thing to be doing. So as we come through the summer period and looking ahead to the autumn, I urge you to sit down and look at your cash position and decide whether you need to start raising finance now instead of leaving it too late. I've got to say 2-3 months in which to raise this money. It's easy enough. But the good thing is they planned ahead. So sit down, look at your cash flow forecast and see what your cash position is going to look like in the autumn. Don't get caught out. Plan ahead. Well, that's it for another bulletin. I hope you enjoyed it. And if you did, please don't forget to give it a like and a share. So that's it. I look forward to being with you again next time. In the meantime, have a great, successful, profitable and healthy week.